Hi everyone, welcome back. Today we're going to be looking at how to choose a financial advisor. When you decide that you need financial advice for whatever reason that may be, there are generally a set of questions you should be asking, either yourself or the financial advisor, so you can work out if they're the right fit for you and if they can help you in the right way. So I'm going to be running through the list of questions you should be asking. Make a list, make a checkbox, and then you should be asking these of each firm you speak to before you settle on choosing a financial advisor for yourself. Now, this first question is the most important one, and it's, are you independent or are you restricted? So I myself am an independent financial advisor. So being independent means that I have no limitations on the products that I can choose or the policies, the providers, the investments. That's completely up to me. I have free reign over the whole of the market and there are no limitations placed on me. So that means that for every client I can choose the most appropriate investment, portfolio, provider, etc., etc. Now, if you have a restricted advisor, it means they are limited generally by a particular provider or a particular type of policy. So they can only sell you products that are provided by that provider or that particular policy. Now, that can have its limitations because obviously they can't say this is the best product on the market for you. They can only say this is the best product that we can offer you. So it's very important that you make sure that you know what a restricted advisor is compared to what an independent financial advisor is, and you make sure that they are going to be able to meet your requirements. This second point is very important to a lot of people, and it's about the charges and the fees that you're going to have to pay for the advice that you're going to get. Now, a lot of advisors charge you nothing for their first meeting. It's generally a free meeting. Certainly myself, there's no time limit, there's no cost to it, and it's just a good idea to have an initial meeting with an advisor so you can get to know how they operate and how they can help you, and also tell them exactly what your situation is and why you're looking for help at this time. When you do see that advisor for the first time, they should give you an idea of how their charging structure works, whether it's percentage-based, hourly-based, fixed fee based, etc., etc. So you want to be walking away from that meeting knowing what you will be paying and when you will be paying it. They might not be able to give you an exact amount if it's a percentage based fee, or if there are more than one element to your circumstances, then it might vary slightly from what they disclose in their client agreement or in their terms of business, but you should be able to walk away confident that you understand how their fee structure works. If not, make sure you ask plenty of questions. You need to feel confident that you're going to be getting your money's worth out of them. Not only does this apply to fees for initial work that's carried out, putting policies in place and things like that, but also for ongoing servicing. Now, you don't have to take on an advisor on an ongoing basis. You might just want a transaction-only service. But if you do want someone to be there for you on an ongoing basis, say that you meet them once a year, etc., etc., and they're always going to be there for you to call up, or they'll get in contact with you if particular things happen, it's important to make sure that you know what the ongoing costs are and how they will be paid to the advisors. And also, if you decide you want to cancel that at any point, what is the notice that you have to give the advisor? Do you have to give them a year's notice, a week's notice, etc.? So it's good to know what you'll be tied into, if at all. Another good question to ask is, how is the advice going to be provided? Now, with this year, coronavirus has obviously had an impact on how people are seeing clients and things like that. But are you happy with the remote service? If so, that's great. A lot of advisors are offering Zoom meetings, remote conversations, phone calls and emails only. Some advisors have managed to put social distancing guidelines in place in their offices and so are still offering face-to-face meetings. So it's up to you really, which would you prefer? If it doesn't bother you, then that's absolutely fine. I'm sure you can still meet via video conferencing your advisor whenever you want to speak to them. And some people prefer that because they can do it from the comfort of their own home or on the lunch break or whatever's easiest for them. But if you do want to have an advisor that you can go and see face to face in their own office setting, then you need to make sure that they are offering that at the moment because that can be limited by coronavirus. I'm not sure how long that will go on for, but hopefully by the end of this year or early next year, you may start to see some more advisors on a face-to-face basis, but don't quote me on that. You also want to make sure that your advisor is qualified and has the right qualifications to be able to help you with what you want to achieve. So they should somewhere, either on their website or in their office, they should have a certificate that tells you what qualifications they have and who it's been provided by. They should have a diploma in financial planning or something equivalent offered by a particular company. So either the CII, the CISI, there are various different companies that offer that qualification, and each one will be called something slightly different, but it's called a level 4 qualification that you have to be providing advice to clients. Now you need to make sure your advisor has at least that qualification, otherwise they shouldn't be meeting with you as an advisor. Some advisors have specific qualifications that go above and beyond that, either in certain specific areas. They may be chartered, for example, or they may be a fellow of the CII. There are various different ways you can achieve those different things, but it's important that if something like that is important to you, you need to ask what extra qualifications they have and what makes them qualified to help you, particularly in that area that you're looking for advice on. You also want to know how long the company's been trading, how big the company is, and how long that particular advisor has been qualified and has worked for that company. Now, those all kind of bundle up into one question, but you need to know if they're a big company, a small company, a one-man band, and you need to be happy with that sort of size of company. You also need to ask them how long they've been qualified. They might be newly qualified, they might be a seasoned advisor, but either way, they have to have at least a minimum qualification, but some people might prefer to see someone that has a little bit more experience under their belt. That's perfectly acceptable to ask an advisor when you see them in the first instance. If it's a bigger company that you might be dealing with, then it's very possible that you won't be speaking to the same person or a couple of people every time you speak to the company. So you need to be happy that that might be the case. Whereas if it's a one-man band or if it's a smaller company, it's very likely that you'll get to know your advisor personally and you will only speak to them, or there might be a small team of people that you will always be speaking to. So it can be a bit more of a personal experience. There's no right or wrong answer, but you just have to be happy that that company can meet your requirements. Last but not least, if you are taking on ongoing servicing with an advisor, you need to know how often they're going to be reviewing your portfolio and inviting you to attend review meetings. Now, most advisors would invite you in at least once a year to speak to them. You can, of course, call them up in between then if you want to have a chat with them or there's something on your mind, or generally the advisors may call you in between those meetings if there's something in particular they think you should know about. But it's important that in their terms of business or their client agreement or whatever paperwork they've given you, it should stipulate exactly what time frame there will be between portfolio reviews. Now, things can happen in the world, such as elections, world disasters, coronavirus, things like that, can mean your portfolio might have a bit of a sticky time, and your advisor will be on hand. If you want to have a call and with them and you want some reassurance, please just pick up the phone and speak to them. That's what they're there for. But generally, you should be seeing your advisor at least once a year. You don't have to go to that meeting if you don't want to. They'll still be there for you, but if you don't really particularly think your portfolio needs reviewing at that point, that's absolutely fine. But they should be inviting you in to speak with them once a year. That's all, guys. I hope that's a helpful checklist of things to go and speak to IFAs about. It's always advisable to go and see more than one IFA before you choose who you want to use, just so you can get a feel for how different companies work. But go out there and choose someone that's right for you. Like the video, subscribe to the channel, and I'll see you next time.